Welcome back, everybody. We are at the 29th Annual Barron Investment Conference, and our next guest can tell us a little bit about the state of the consumer, actually a lot about the state of the consumer, and whether the travel rebound is really here to stay. For more on this, we want to bring in Vail Resorts CEO Kirsten Lynch, also Hyatt Hotels President and CEO Hoplamazian, and welcome to both of you. It's really good to see you guys this morning.
Thank you. It's nice to be here.
Thanks for having us.
I can't think of a better couple of people who can tell us about what's really happening right now with travel. I mean, you guys have everything covered around the globe. What's happening with the consumer, what's happening with business. So why don't you start off and tell us just a little bit about it. Mark, what are you seeing right now? What's happening?
Well, leisure has been the major driver of this recovery, and it continues to be so strong. We were up 20% in the third quarter, but the bookings into the fourth quarter and into early next year are up between mid-teens and 20%.
Mid-teens off this year?
Off of this year.
Yeah.
So we're seeing sustained demand. But the other big news of October was that corporate groups are back with a vengeance. We booked, in the third quarter of this year, we booked 30% more corporate group business into 23 than we did in 2019. 30%. So corporations are back on the road as well, but leisure has really been the key driver, and business transient is now starting to come back. Okay. And we've got our major customers, big tech companies and so forth, are back to about 80% of their pre-pandemic levels of travel.
Wow.
Yeah.
Kirsten, we are headed into your Super Bowl season, basically.
Yes, we
the
are.
most important time of the year for you. What are you seeing?
Well, we just finished our ski season, believe it or not, in Australia, and all three of our resorts in Australia had record seasons, which is a great indicator of demand. Also, our pass sales, which we just announced in our September earnings, we saw growth there, and that's a great indicator for us because that's a non-refundable commitment into the upcoming season. And overall, we really cater to a pretty high-end guest that tends to be very resilient through economic uncertainty.
So they haven't felt any pain, or at least not that you've seen.
We've not seen the indicators of it yet, but I think our company is well positioned in terms of the amount of our revenue that's committed in advance, the number of ski resorts that we have, and the positioning that we have in the marketplace.
It is Jobs Friday, and the job market has been incredibly tight. That's been the story that everyone's been watching. That and inflation are the two issues. What do you see in the jobs market? How difficult is it to get people that you can hire? Because I think even as other areas have seen some return to normalization, I think leisure and hospitality have been the one area where things are still a little out of whack, probably because there's so much demand. What are you guys seeing right now?
Yeah, I mean, what I would say is that over the summer, it was acute. We had serious shortages everywhere. The industry fought hard to get additional H-2B visas, temporary work visas. We got some extra, but about a fifth of the number that we actually needed as an industry. It's gotten a little bit better, and we look at our own data in terms of how many open positions that we've gotten and what the rates of change in wage rates are. It appears that we hit an inflection point at the end of the summer.
Meaning that
they started to
wage
come off,
inflation is coming
down, and positions are starting to get filled more quickly. 2 months of data does not a trend make, so we have to be cautious about that. But we could well be headed towards more of something that looks like stability in the labor market instead of this inexorable sort of catch-up game that we were playing before.
Kirsten, I want to ask you, I'm assuming it's a similar story that you're seeing.
Yeah, labor is incredibly important to our business. We don't make anything. We create an experience at our resorts, and we announced a big investment in labor for this upcoming season, $175 million investment in order to get fully staffed, which is increased wages, increased benefits, investment in leadership development, and an investment in affordable housing. And staffing right now is looking good.
You've been making a lot of investments also in Europe, expanding there.
Yes.
Really interesting time in Europe when you consider the strong dollar and when you consider that Europe's economy is not nearly as strong as ours. I guess this is a long-term play. Why Europe? What do you see there?
Yeah, we're very excited about Europe. The skier market in Europe is almost 3 times the size of the market in North America. And our first acquisition we're incredibly excited about is Andermatt in Switzerland. And we really view this as an opportunity to grow our market share of the luxury European ski market, as well as listen and learn to unlock some future expansion and growth opportunities in Europe.
So you said first, you're looking for other acquisition targets too.
Yes, we are.
And when
After a couple of years to prove how good we are.
Yes.
Coming from a major investor, Ron, you have talked about both of these companies for a long time. They're both long-term investments. What is it that you like? What is it that you see?
One of the things that's really interesting about Vail is the advanced ticket sales that they make. So 72% of our tickets right now, the people who ski on a lift buy it before it even snows, buy it in advance. That's one thing really interesting here. And as far as Hyatt, what we're doing there is we're selling off assets that we own at incredible prices. Our company in the stock market's valued for 11 or 12 times EBITDA, and we're selling them for 15, 16, 17 times, and we're using that money to buy back stock. In addition to that, what we're doing is we're keeping back management contracts for all the properties we sell. So it's very interesting. It's capital light becoming, and here we have a product that is being sold in advance before it even snows.
So becoming almost like a tech capital light company to a certain extent. I mean, that's the new model, Mark.
We've been on an asset light strategy for the last 5 years, and as Ron said, we've sold over $4 billion of hard assets, hotel assets, and we reinvested a lot of that in platforms for growth. Apple Leisure Group, Two Roads Hospitality, and Miraval, the high-end destination spa resort company, and all of those we bought are really, we created them for about high single digit, low double digit kind of multiples, while we're selling real estate in the high teens. So it's been quite a swap, and the earnings shift towards asset light earnings has been pretty pronounced. So that's the path that we've been on.
I'll ask each of you, what's the biggest challenge that you face right now, especially as we head into a potential downturn for the economy? That's what every business leader seems to be talking about. How do you prepare? What are you concerned about? Kirsten?
Yeah, I think you hit on it earlier when you talked about labor. I mean, so important for us to get fully staffed. It is a top priority for us. The reason we made this significant investment, our employees, our frontline employees are, they create the experience for our guests. We did get fully staffed in Australia this winter. We did get fully staffed over the summer. Our staffing numbers are looking strong as we head into this winter, and I think that's the most important piece, because that's how we deliver the guest experience, which ultimately will then retain our guests because they have a great experience, and then they'll come back, and we generate the loyalty through that. So really focused on labor.
Your numbers are looking strong. What does that mean? How many positions, or what percentage of your staff do you position?
Well, we're still ramping up for the season. Actually, we just opened one of our ski resorts, Keystone, so we're still ramping up, but we are seeing our retention of our staff from last winter to this winter strong, retention from summer staffing into winter strong, and applicants, and the pool of applicants coming in is looking strong as well. So I'm feeling optimistic, but it is the number one priority that I'm focused on right now.
Mark, how about you?
Yeah, I mean, we're of course aware that there's recession risk, but like Kirsten described earlier, we serve the high-end traveler. So we think that the risk that we face in terms of travel demand slacking is relatively more limited. The biggest issue I've got that I look forward to is two things. They're very different causes, but similar result, which is China. Yeah. China has been on its back most of the year, and so we posted a record third quarter, a record second quarter, and a record third quarter, even with China on its back. And we have over 100 properties in China, but the lockdowns have caused serious spikes and troughs with respect to occupancies. So if China starts to recover next year, that's just going to be additive to what we're doing. But I've got my eye on China in terms of what that post-COVID lockdown looks like. And then the second is interest rates in the United States has slowed down construction of new hotels. Period. End of story.
That's probably a good thing for you.
Well, yeah, supply and demand. It really works in our industry, and it's working in the favor of pricing and being able to sustain our being able to satisfy demand. But at some point we have to get back to building hotels again. So, and I think it's more about the uncertainty of not knowing when the Fed will be sort of pivoting back to a more constructive and less constrictive policy. That's the key issue, because these assets are going to be in place for 30, 40, 50 years. And so trying to make decisions based on what's going to happen this coming month or quarter, it's a little short-sighted. But developers do underwrite based on what they can borrow.
Right.
So that's the other major issue.
Joe's got a question too. Joe?
Kirsten, I'm looking at just a list of your mountains because I heard you mention Keystone. I know all of them. I went to school out there. I just think you got the coolest job in the world. You never bought copper. Do things come like? Let's say copper. Let's say they say, you know, we went out. Would you or Telluride, which I just visited, which is just pristine. I mean, do you still buy things? Can you do that? Do they get cheap, or people want out, or do they just keep going up in value? And I also love Breckenridge. What a great town. And that's one of yours. Crested Butte. I didn't know you owned that. So would you ever? You still buying? You still buying?
Well, thank you. I think I actually have the coolest job as well. And yes, we're always looking for opportunities. I think expansion and M&A is still an opportunity.
I could scout some locations for you. If you
okay, well, we may take you up on that. We'll see how that goes. But yes, we're always looking for opportunities. Still in North America, very focused on Europe, and also very focused on Asia.
Amazing.
Excellent. Excellent. Kirsten, Mark, want to thank both of you very much. I think that gives us a really good picture about what's happening right now. So thanks for being here.
Thank you, Becky. It's great to be here. Thank you, Ron.
Of course, we're going to have much more from Ron. That's coming up just a little bit later. But Andrew, in the meantime, we'll send it back over to you in the studio.